Hey guys, Nate here with NuView Trust Company, and today we're talking about one of my favorite accounts, the HSA or Health Savings Account. What are the benefits, why would you want one, and how do you self-direct an HSA to own things like real estate? First, let's talk about the Health Savings Account or HSA. Created back in 2003, these are savings accounts that work in conjunction with a high deductible health plan that allows you, the investor, to make contributions to the savings plan and not only get a tax deduction, but invest the money within your health savings account to make completely tax-free gains that can be used to pay for qualified out-of-pocket health expenses. Let's talk about the qualifying criteria to have an HSA first. I kind of mentioned one, having an HDHP or high deductible health plan. My suggestion is call your health insurance provider, ask them if your health insurance is HSA compatible, and if they say yes, you're almost good to go. The other two requirements in order to have an HSA and make contributions to an HSA is you cannot be a dependent on someone else's tax return, and you can't be currently on Medicare. You can have an HSA set up and invest it prior to becoming on Medicare, but once you elect to go on Medicare, then you can make no further contributions at that time. Now let's talk about the benefits to an HSA, and then we'll talk about what you can invest them into. First, the HSA has some of the most tax advantage benefits of any account that we administer here at NuView, and any account that I've seen even outside of NuView. For one, when you have the HSA set up, dollar for dollar, you get tax deductions when you make contributions to your health savings account. So just by taking money out of your pocket and putting it into the savings plan, you immediately get to write that off as a tax deduction. Now, what are the contributions that one can put into a health savings plan? If we're talking about 2021 contributions, it's based on who is covered on your insurance policy. So if you have what's called a single plan, or it's just you covered under your insurance, then you can make a maximum contribution of $3,600. If you are above the age of 55, you're allowed to put an extra $1,000, bringing you to a total of $4,600, fully tax deductible. If you're on a family plan, that means your insurance covers you and another person. It could be a spouse, it could be a child. You can put up to $7,200, and again, fully tax deductible. And if you're above 55, you can put an extra $1,000 as well as a catch-up contribution, bringing the grand total to $8,200. Now, the second advantage you get when it comes to taxation is you can invest your HSA. You would be shocked to know how many people actually don't even realize this. They just use the savings account to get the tax deduction and just leave the cash in there, but they don't actually invest the money. Here's the second great benefit with an HSA is you can invest in anything that you can invest in with an IRA, meaning stocks, traditional stocks, cryptocurrency, even alternative assets like real estate, promissory notes, investments into private companies, private stock, oil and gas. The investment options are as limitless as your IRA options. So when it comes to investing, taking control of your investments within an HSA can give your savings account tremendous returns in a tax advantaged way. And then the third benefit is when you take distributions out of the health savings account, provided you're using those distributions to pay for qualified out-of-pocket health expenses, it comes out completely tax-free. So it's tax-free going in via the deduction, it's tax-free as you invest it because you pay no capital gains as you buy and sell things, and it's tax-free coming out as you pay for qualified out-of-pocket health expenses. Another great benefit to this account is it's not a use it or lose it account. It's often confused with the use it or lose it account, which I'm referring to, which is the flexible spending account. That account works very differently than the HSA. As some of you might know, the FSA, or flexible spending account, you put money in, and if you don't use it by the end of the year, you lose that money. That sounds the opposite of flexible to me. The health savings account doesn't work like that at all, and often people get confused with that. You can invest and reinvest the money without losing it on an annual basis. And here's the other cool thing, is provided you have the HDHP in place and the health savings account active, you actually could just leave your capital in the HSA and continue to invest it and compound on itself. And provided you take money out to reimburse yourself for a qualified health expense while you have the HDHP and health savings plan in place, you can just reimburse yourself at a later point with expenses that you've paid out of pocket. So if you think about the eighth wonder of the world, Einstein gave this to us, where compounding interest is the eighth wonder of the world, you can continue to invest and reinvest your HSA, continue to put contributions in tax deductible every single year, and just leave the money growing. At the meantime, you're paying for out-of-pocket health expenses out of your pocket, and then 10, 20 years down the road, just take a big fat distribution out of the HSA and pay yourself back. There's no other account that does that. So many, many benefits, and I've got one more benefit for you as well that even financial advisors miss sometimes. One time in your life, you can fund your HSA with a tax-free transfer from one of your traditional IRAs. Whew. Did that go over some of your heads? Let me repeat that. You can fund your HSA with a transfer from a traditional IRA, like a SEP or a traditional or even a simple. Now what that means is the ability to do that is the ability to take money out of a traditional IRA, for example, that's taxable when you take it out and penalized if you take it out before 59.5, and allows you to move that money up to the contribution limit for the year, move that money over to your health savings account, and when you take it out of your health savings account, if it's being used to fund an out-of-pocket health expense, it comes out tax-free and penalty-free. So the ability to do that move enables you to take money out of a taxable account that you're penalized for taking money out before 59.5 and moving it right over to an account that you can use today that you're not penalized. Now that we've talked about the benefits, how do you invest one? Well, you can invest one just like you invest a Roth IRA, just like you invest a traditional IRA or SEP IRA. You can invest in stocks, mutual funds, cryptocurrency, or alternative assets. At NuView, we have an HSA that lets you do all three. So what I often see some of our investors do, for instance, if you own real estate or you're a note investor, is they partner their health savings account along with maybe their Roth IRA, their spouse's Roth IRA, and maybe even their kids' education savings accounts, which we'll have that information on a future video. They partner all those accounts together on a single investment. That way, when they get profit back from that investment, the profit comes back pro rata and goes back to different accounts that fit different purposes. The portion of the money put up by your Roth IRAs or traditional IRAs, that goes to your retirement bucket. The portion that you put up from your health savings account, the profit that comes back immediately can fund your health care needs. And the money that's partnered to the ESA goes to feed your education expenses for your kids or your grandkids. So if you're utilizing all these tax-exempt buckets that we have here at NuView Trust Company, you'll find not only can you save for retirement faster, but you can pay for current expenses and consume current goods with tax-free dollars. That's the true way the rich get wealthy, is by understanding how to properly use their money in different buckets so that they eliminate taxes. So if this was helpful to you guys, make sure to follow us on Facebook, subscribe to our YouTube channel so you can get continuing notifications of future education content from NuView Trust Company. And if you are interested in establishing your own health savings account that can be self-directed, email us at info@nuviewtrustcompany.com.